Hi friends, Simit here from informedtrades.com. In this video, I wanted to talk a little bit about bubbles, assets or markets that are really rising at a parabolic rate and then go through a correction, a parabolic collapse on the flip side, a reversion to the mean. But want to talk about bubbles and how we can spot them. Very useful in our trading. So the first thing is that there are four signs of a bubble. One is an increase in the money supply. Two is rapid acceleration of price in the asset, technology stocks, houses, whatever the asset that is being turned into a bubble. Three is fraud, some form of deception. And four is the emergence or onset of untrained speculators who come rushing into the market after they see the opportunity, see the rapid increase in price. First issue to look at is the increase in money supply. I believe this is the most important factor to consider. On the screen right now, you're seeing a chart of MZM, which is a measure of the U.S. money supply provided by the Federal Reserve. This statistic is published weekly, so it's definitely something that's easy to monitor and something that if you want to monitor whether bubbles are developing or how the economy is faring, money supply is definitely something I think is important to watch. On the screen, you can see that from 2000 to 2010, you can see there was really a sharp increase in money supply. And if you think back during this time in the U.S. economy, there was the emergence of a lot of bubbles. Bubbles in technology stocks, bubbles in houses, in clean tech. In 2007, there was a really sharp spike in oil. All of that sort of goes to prove or shows the significance of money supply. That money that was created from 2000 to 2010 has to go somewhere. So when we see sharp increase in money supply, that's a sign that we're going to see bubbles shortly thereafter. This chart on the screen now shows sort of the time frame or the tendency of bubbles. Early on, this is what a healthy bull market looks like. Slow and steady accumulation driven by investors with the capital and with domain expertise to really help build companies or legitimately drive healthy bull markets. Once there's media hype and then enthusiasm, greed, and the rush of speculators who aren't particularly trained in that given asset comes in. That's where we see the mania phase and the bull market, and then the collapse. So it's this increase in price. When you see that rapid acceleration in price, that's something to watch out for, a signal that we may be in a bubble, especially if the money supply is increasing. Third sign is fraud. Especially once you see the increase in price, that tends to create a lot of greed or draws in the get-rich-quick mentality. Once the emotion of greed is triggered, there tends to be a greater incentive to succumb to fraud and deception. So in the case of the U.S. housing market, which was in a bubble, the housing bubble was global, but in the U.S. in particular, it was from 2004 to 2007, maybe early part of 2007. You can see that there was a greater fraud in mortgage loans, and that was being reported, especially 2005, 2006, significantly greater than what we saw in the years past. Okay, and lastly is the fourth important characteristic of bubbles is the onset of untrained speculators. So speculators who don't really know much about the market, but they see price rising dramatically. They don't want to miss out. They see an opportunity to get rich quick. They come rushing into the market. Of course, bubbles don't last. A rapid acceleration in price of that kind is unsustainable. So it eventually collapses, and unfortunately, many people tend to lose a lot of money. Often a steady bull market is much healthier for investors or for the untrained speculator. Of course, the trained speculator who knows how to manage bubbles can find a way and can turn a bubble into an opportunity. That's about it. If you have any questions on this video, want to join us, learn more, add more, head on over to informedtrades.com. Thanks and best of luck in your trading.